Crude oil delivered a major shock to the markets today, hitting $119 before a sharp late-day reversal. While inflation fears sparked an early panic, a significant legal decision helped fuel a late rally. It was a day defined by what we're calling a market fracture. Three primary hotspots are defining the market's direction right now. First is the energy shock, the spike toward $119, which has reignited inflation concerns due to supply disruptions in the Strait of Hormuz. Second, liquidity stress is hitting private credit, where major managers have started gating investor redemptions. Finally, the AI sector is acting as a safe haven, with semiconductors and software showing resilience ahead of key industry updates. Market direction today is being defined by three main hotspots. First, a physical supply disruption in the Strait of Hormuz is rattling global energy benchmarks. Next, liquidity stress is beginning to surface in private credit markets as managers move to handle investor outflows. Meanwhile, the AI sector is serving as a safe haven bid, with semiconductors and software platforms holding steady ahead of major roadmap updates. The energy market is navigating a period of intense physical stress. We've seen crude move from its February baseline in the mid-60s to a sharp spike. During Asian trading hours, prices reached nearly $120 as transit through the Strait of Hormuz effectively halted. While we've seen a retracement back toward the $95 range, Eurodollar University and Joseph Carlson note that physical constraints are the real story. Storage limits are reportedly already forcing producers like Kuwait and Iraq to curb their output. If the strait remains closed through Friday, current forecasts suggest a regional output drop of 4 million barrels per day. This path leads to a potential 9 million barrel deficit by month-end. The pressure is already visible on the production side. Physical storage limits have been reached, forcing countries like Kuwait and Iraq to actively curb their output. Beyond the energy headlines, we're seeing significant liquidity signals emerging from the private credit space. At BlackRock, investors recently requested $1.2 billion in redemptions, but the firm only executed $620 million due to contractual limits. This is what's known as gating, a process where funds limit withdrawals to protect their capital during periods of stress. Blackstone is also navigating significant pressure, facing $3.7 billion in redemption requests. In response, the firm raised its fund redemption caps from 5% to 7%, backed by firm capital. Many market participants view these gating measures as a warning sign of broader liquidity stress. The concern is that this friction could eventually weigh on credit-sensitive equities and regional banking sentiment. While macro pressures weigh on the broader market, AI infrastructure is proving to be a strong safe haven. UBS recently reiterated its $245 price target for NVIDIA, looking toward the upcoming GTC conference and its roadmap updates as a major fundamental catalyst. At the same time, Susquehanna raised its target for Micron to $525, citing a persistent supply-demand imbalance in the current memory cycle. Joseph Carlson also noted relative strength in ASML today, interpreting the move as a defensive rotation into advanced technology while broader uncertainty persists. Microsoft is also broadening its reach, rolling out Copilot updates that integrate Claude and introduce new pricing tiers for autonomous agents, starting May 1st. At the same time, Joseph Carlson points to ASML's relative strength today as evidence of a defensive rotation into advanced technology, even as the broader market faced significant pressure. Healthcare also saw a major legal shift ignite single-name momentum today. Hims & Hers surged 40% after Novo Nordisk reportedly withdrew its litigation and entered a deal to sell branded Ozempic and Wegovy on the Hims platform. This was a high-conviction move, seeing massive volume with an 85% turnover rate. Tesla is seeing some pressure as third-party reports suggest a drop in FSD safety performance. From a technical standpoint, analysts are watching the $380 mark. Falling below that could signal a double top formation. Meanwhile, AI infrastructure is getting a boost from passive flows. Companies like Veritiv and Coherent are joining the S&P 500, which should channel more institutional capital directly into the power systems that fuel the AI sector. That late-day bounce was intense, but its foundations are still being debated. Nana reports the initial spark was triggered by unconfirmed rumors that military actions might be nearly complete. This move was then fueled by a negative gamma squeeze, which forced short positions to cover. Looking ahead, Wednesday's CPI release is the primary anchor for the market. However, keep in mind it reflects February data and won't capture this month's energy spike. Markets remain highly sensitive to physical supply headlines and credit liquidity gates. As we approach the incoming inflation data, the priority is risk management. Keep a close eye on the watch list for NVDA, Micron, and crude oil stability. You can find the full list of sources and citations in the description. Thanks for listening.